In the annals of investing, one name often shines brightest: Warren Buffett. Yet, behind the Oracle of Omaha, stood a quieter, equally profound mind, Charlie Munger. For decades, Munger wasn't just a partner, he was the architect of a philosophical revolution that reshaped Buffett's approach, transforming it from merely good to truly legendary. His influence catalyzed a new era of strategic thinking, demonstrating how one person's vision can elevate an entire enterprise to unprecedented heights. This story reveals the enduring power of partnership and the potential for continuous growth. Before Munger, Warren Buffett was already a formidable investor, renowned for his cigar butt strategy. He sought out businesses that were struggling but could be acquired for less than their intrinsic value, even if they had little future. The idea was to get one last puff of profit before they expired. This approach yielded success, yet it was inherently transactional, requiring constant searching for new, overlooked opportunities. While profitable, it limited the potential for compounding growth that comes from owning truly exceptional, enduring enterprises. Their initial encounter in 1959 sparked a lifelong friendship and partnership. Munger, a brilliant lawyer and keen businessman, brought a different lens to problem solving. While Buffett focused on numbers and discounts, Munger emphasized the qualitative aspects of a business, its competitive advantages, its management, and its potential for long-term dominance. This intellectual synergy was not an overnight transformation but a gradual, profound evolution. It demonstrated how truly transformative growth often stems from embracing diverse perspectives and challenging one's own established paradigms. Munger's influence initiated a fundamental paradigm shift for Buffett. He gently, yet persistently, steered Buffett away from simply buying cheap assets towards acquiring outstanding businesses. This wasn't about abandoning value but redefining it. True value, Munger argued, lay not just in a low price, but in a company's intrinsic quality and its ability to compound earnings over decades. It was a philosophy rooted in patience and foresight, encouraging an investor to see beyond immediate gains to the vast potential of long-term wealth creation. Buffett's earlier approach, while effective in its time, presented a unique challenge: good businesses rarely stayed cheap for long. This meant a constant cycle of buying and selling, preventing the investor from truly harnessing the power of compounding returns. The search for distressed sales was a race against time, limiting the scope for sustained, exponential growth. Recognizing this constraint was a crucial step, opening the door to a more enduring and less labor-intensive path to prosperity. It challenged the notion that quick profits always lead to lasting wealth. Munger's core wisdom centered on the profound difference between a fair business at a wonderful price and a wonderful business at a fair price. The latter offered far greater potential. A truly exceptional business, with strong competitive advantages, robust management, and a defensible market position, would compound wealth reliably over time, even if its initial purchase price wasn't a deep discount. This shift enabled Buffett to move beyond mere arbitrage to become a genuine owner of world-class enterprises, fostering a deeper, more committed relationship with capital. Beyond specific investment choices, Munger instilled an even deeper commitment to rational thinking and extreme patience. He advocated for a multidisciplinary approach, drawing insights from psychology, history, and science to understand human behavior and market dynamics better. This rational framework, coupled with an unwavering long-term outlook, allowed Berkshire Hathaway to ride out market fluctuations and focus on the intrinsic value of its holdings. It highlighted that true wisdom transcends any single field, empowering investors to make decisions grounded in fundamental principles rather than fleeting trends. A key concept Munger emphasized, and which became central to Berkshire's strategy, was the economic moat. This refers to a company's sustainable competitive advantage that protects its long-term profits and market share from rivals. Whether it's a strong brand, unique technology, cost advantage, or network effects, a moat creates a powerful barrier. Recognizing and investing in businesses with deep moats meant betting on enduring success, not just fleeting opportunities. It taught the invaluable lesson of safeguarding one's investments by seeking out truly defensible positions in the marketplace. Berkshire Hathaway itself was initially a struggling textile mill, a quintessential cigar butt acquisition for Buffett. Munger's influence was instrumental in transforming this decaying asset into a holding company for some of the world's most enduring and profitable businesses. The pivot was not easy, requiring decisive capital allocation away from the declining textile operations towards superior ventures. This monumental shift underscored the courage to admit past mistakes and the foresight to reallocate resources where they could generate truly spectacular, compounding returns for decades to come. As Munger's philosophy took deeper root, Berkshire Hathaway began acquiring businesses that exemplified his ideals: strong underlying economics, clear competitive advantages, and excellent management teams. This wasn't merely about buying diversified assets, it was about curating a portfolio of outstanding enterprises that could thrive independently while contributing to the larger whole. The success of this strategy laid the foundation for Berkshire's legendary status, demonstrating the power of a cohesive investment philosophy applied with discipline and an unwavering focus on intrinsic quality. Munger's emphasis on exceptional businesses unlocked the true potential of compounding for Berkshire Hathaway. Instead of buying and selling frequently, they held onto their best assets for decades, allowing the underlying businesses to grow and generate increasing returns. This patient, long-term approach transformed Berkshire into a compounding machine, where profits were continually reinvested into more wonderful businesses. It serves as a powerful testament to the idea that consistent, quality growth, sustained over time, will inevitably lead to exponential wealth creation. Munger's rational thinking wasn't just about avoiding irrational decisions, it was about building a robust mental framework to analyze the world. He advocated for a latticework of mental models, drawing from diverse disciplines to understand situations from multiple angles. This approach fostered intellectual humility and a relentless pursuit of truth, pushing beyond simplistic explanations. It reminds us that true understanding comes from a willingness to integrate knowledge across boundaries, constantly refining our mental tools to navigate complex challenges and seize opportunities with clarity. In a world often driven by the need for constant activity, Munger championed the power of strategic inaction. He understood that often, the best investment is no investment at all, or simply holding on to an exceptional business. This required immense discipline to resist the urge to constantly do something. By focusing on a few great opportunities and allowing them to mature, Munger and Buffett avoided countless mistakes. It's a profound lesson in patience, teaching us that sometimes, the most powerful action is the deliberate choice to wait for the perfect pitch. The synergy between Munger and Buffett became legendary. Buffett often referred to Munger as the abominable no-man for his ability to identify flaws and push for greater clarity, preventing countless missteps. Yet, it was this honest, intellectually rigorous dynamic that forged an unbreakable bond and a truly formidable investment machine. Their partnership stands as a beacon, illustrating how complementary strengths, mutual respect, and a shared commitment to excellence can elevate individuals and organizations far beyond what either could achieve alone. Munger's wisdom extended far beyond the realm of finance. His relentless pursuit of knowledge, his commitment to ethical behavior, and his unflappable rationality became a life philosophy. He championed continuous learning and mental growth, believing that constant self-improvement is the greatest asset anyone can cultivate. This holistic approach to life and business offers a timeless blueprint for personal development, inspiring us to embrace a journey of lifelong learning and principled decision-making in every aspect of our existence. Charlie Munger's profound impact on Warren Buffett and Berkshire Hathaway is an enduring testament to the power of wisdom, rationality, and a long-term vision. He didn't just teach Buffett what to buy, he taught him how to think. His philosophy continues to guide investors worldwide, encouraging a focus on quality, patience, and ethical conduct. Munger's legacy proves that true wealth is built not on fleeting trends, but on foundational principles and the courage to apply them consistently. His life illuminates the path to lasting success for all who seek it.